discretionary projects. We don't see a major change. Okay, like yes, like we on a environment like this, clients would focus more on cost and optimization than transformation. So there is no major change as discretionary, non-discretionary, but the project focus tends to be more on cost optimization than transformation. So the second point there is like all the projects that we won recently, all of them we've been continuing to execute mostly as per plan, and so there is no rethink on what we signed in recent past as well. So there is no change in the whatever clients signed up with us in the last 1 year. We are continuing to deliver on them, and the revenue flow is along expected lines, and there is no major change discretionary or non-discretionary. GenAI, I don't think that is impacting at this time. Like clients, the way we see it is, clients are trying to see what benefit they can gain, and they're doing multiple experimentations. Like I talked about some of the POCs moving into production, but they're all small projects. We are not talking about huge, large projects here, and so that continues to happen, but it's not eating into a regular TCV.
You've been giving good amount of TCV every quarter for the last couple of quarters there. But, the execution is something getting delayed because of decisions at client level, or, projects starts are not happening on time. Have you assessed the total TCVs that you have got over the last couple of quarters on how they are, stacking up with respect to, are they active, they are on a slow pace, or, they've been deferred by a few weeks or month or quarter?
So just now, that's why I mentioned, like whatever we won, we've been executing as per plan, and the revenue flow has been as per plan. What is hurting us is the programs that we started maybe a year ago, 2 years ago, that are getting reprioritized. I want to reiterate that the programs that we started in the last 1 year, they continue to deliver as per plan. We don't see any of the programs that started after that. See, once the uncertainty was known, we called it out, I think, around last Q4. So whatever we signed after that, clients also knew the environment in which they were signing. So there's not been further rethink on those programs.
NG, when do you see BFSI orders picking up? Because you saw degrowth this year, but as Kriti said, it's not a cause of worry. But from a North America point of view, when do you see orders from the BFSI picking up?
I think soon, right?
What's the trigger?
I think if you really look at it.
What do you see as a trigger for clients to start looking at and giving out orders?
I think this quarter, as Kriti explained, the degrowth has largely been contributed by programs that got finished, number one, and then
seasonal
furloughs, right? Which is pretty much, if you look at UK, Europe, even in Asia Pacific, right? So all that, I think the furlough will probably be there in Q4 also for a couple of weeks or so, but then that should bounce back, right, significantly. And some of the deals that we have won in this $8.1 billion that we have announced is also include deals from BFSI. So you should see that should bottom out, and then I personally believe that we should grow in BFSI from the coming quarter itself compared to the baseline that we have got right now. But if you really look at life sciences, we've grown by 1.1%, manufacturing 7%, energy resources utilities by 11.8%. The whole regional markets have grown well. So if you look at all of this, right, there are deals which are in these segments. These segments, I think, they all are not holding. They're all investing, right? I'm proceeding with it. If you look at technology, or if you look at BFSI, there are pockets where, they want to be cautious. They want to see the impact of new technologies and digital twins and other things. How do we employ them much more productively? So they're waiting and watching, because BFSI always gets the first impact, right? Whether it's positive or negative. So I think, we should see some of those segments show a positive sign in Q4 is what I'm hoping. While, life sciences, manufacturing, etc. should continue to be, at least grow moderately, right?
The India growth, 23% odd. Kriti said it's not going to be like that for every quarter. But I know this BSNL deal is front loaded. So for how many quarters are we going to see the effect of that for India business?
See, India business this quarter is basically during this, seasonally is the third quarter. There are, let's say, third-party software licenses, etc., come in, right, during this quarter. And of course, we have started to deliver BSNL. And BSNL, we have a plan to execute it through the contract period. So it's certainly not one-off. We have just started to deliver a certain number of sites, and we have a long way to go. So I should see that momentum picking up from quarter on quarter over the next at least 4 or 6 quarters. Yeah.
Samir, good set of margins, and you've been able to get 25% this quarter. Do you see some kind of impact with respect to receivables from the clients slowing, the number of days increasing as a result of some of the headwinds which we see in some of the markets?
So our receivable days are best in class, and at 67 days, they're quite managed. On the working capital management, we keep a keen eye on it, and overall as a portfolio level, we manage it. Yes, given a higher interest rate regime, customers also look at strategic cash management, but that's part of it. Our receivable days are steady.
Milind, you said that you expect some contraction in headcounts going forward as well, at the same level as Q3. Do you have any outlook for how much of onboarding that you're going to do for FY25? Have you, have you done the budgeting for that?
So for experienced hires, we budget every quarter. For trainees, like I said, we actually have a number which is similar to what we do in the past years. We may start a little with a lesser number, but we eventually may end up at the same number which we normally budget.